Wall Street closes higher on Friday. Asian markets open with strong gains as Fed Chair Jerome Powell's comments at the Jackson Hole Summit point to declining inflation and strong economic growth. He reiterates that the Fed intends to continue with restrictive monetary policy till inflation reaches acceptable levels. Brent crude rallies about 1% to close at a weekly high of just under $85 a barrel. Gold snaps a 4-day gaining streak, although the yellow metal has spared losses in early trade. Reliance Industries will host its keenly awaited annual general meeting this afternoon. IPO timelines for the retail and telecom businesses will be closely tracked, while business updates and partnership announcements are also expected. Market regulator SEBI submits its status report in the Adani Hindenburg case to the Supreme Court. 22 final investigation reports have been submitted, while 2 investigations are underway. The Supreme Court is set to hear the case on the 29th of August. Speaking at the B20 Summit, Prime Minister Modi plays up India's role in the fast-challenging global supply chain. He also urges businesses to promote the use of ethical AI and asks India Inc. to focus on consumer care. Finance Minister Nirmala Sitharaman says India is on a high growth path on the back of sustained reforms, also points to an upcycle in private investment. Okay, good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a fresh new week, a Monday morning, and we have a lot of global as well as domestic cues to catch up on. But first up, as always, let's take a look at what the Asian markets are doing. Well, they're firing away almost 3% higher on the Hang Seng and the Shanghai is what I'm looking at right now. So the Chinese and the Hong Kong markets, they're leading the gains in the Asian screen. The Hang Seng is up 2.5%. We have Taiwanese index, which is up 0.4%. Nikkei 2 is high by 1.6%. And we have the Straits Times, which is up by 1.1%. So across the board, all the Asian markets, they are higher. And of course, we got some commentary from Fed Chair Jerome Powell at Jackson Hole Summit. We'll get more details on that in just a bit. But that's something which has fired up the markets. We have the GIFT Nifty that'll come up for you on the screen. And that one is indicating an implied open of 55 points in the green. After that massive cut that we saw in Friday's trading session, there could be a gap up opening that we are looking at for our own markets. Let's focus on the US markets now. Wall Street saw shares rally on Friday as investors cheered Fed Chair Jerome Powell's growth commentary at the Jackson Hole Economic Summit. Powell reiterated that monetary policy would remain restrictive till inflation is sustainably under control. CNBC's Steve Leisman brings you the highlights from the Fed Chair's speech.
He was relatively hawkish, though he could have been more so. I think he doesn't necessarily have an itchy finger to hike, but he kind of put us on notice that if a couple things, several things, including one new one, move the wrong way, he would be prepared to do so. That new thing is talking about the economy potentially running hotter than expected. He says if that persists, that could be a reason to hike. If the labor market doesn't cool down, that could be a reason to hike. He threw some cold water on the recent inflation progress, saying it was not enough. It was only 2 months. We can't be sure it's not going to go away. There were a few things in there for the doves about some of the progress on inflation, some of the easing in the labor market. But you'll notice a couple things he didn't say. He didn't talk about the word, he didn't say the word cuts. That's not in the forecast. The choices he faces are to hike more or essentially to stay on hold at a restrictive level. Also didn't say, and David Kelly mentioned this before he spoke, and I thought I might hear this phrase. He didn't talk about risks being balanced. Maybe he sort of talked about a world in which risks are more balanced than they were, but he didn't use that phrase explicitly. So I would say he's definitively on hold, but kind of leaning towards a more hawkish stance if the data does not continue to break the way it's been breaking.
Okay, that's analysis of what Fed Chair Jerome Powell said at Jackson Hole Summit the other day. The Fed Chair's tone at the Jackson Hole conference was somewhat hawkish, but he maintained the central bank would carefully proceed on tightening based on data. Let's listen in to his comments.
These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data.
Okay, those are some excerpts from his commentary. So let's get you some reactions to Fed Chair Jerome Powell's speech. Hear out what Jeremy Siegel, professor at the University of Pennsylvania, and David Zervos of Jefferies made of Powell's remarks.
There was really nothing new than he said in the July FOMC meeting. In fact, I was disappointed because what's happened in the market, as we all know, is that yields have risen, real yields have risen, real growth has risen. He didn't address any of that. He seems almost stuck in that mode. Real growth is higher. That means more workers. That's more pressure on wages. That means we might have to go higher. And that's not the story. The story is we're getting real growth higher because we're getting productivity higher. In fact, the labor market is slowing down. I mean, expectations for next Friday are about 160. Less than half what we had last year.
I think he left himself a lot of options. He definitely gave us a Volcker-esque hawkishness, but he also had that kind of confused Greenspan tone. And the market reaction, I think, would have made Greenspan proud. He didn't really move the dollar. I think that's kind of what he wants. He wants to be sort of in a world where he's not really giving a lot of indications. He's not forcing the market into taking big positions either way, and maybe having a pretty diverse market view out there, which in the end I think should reduce volatility.
Okay, all right, that's the global market action. But how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Rima, let me come across to you first up. What is the market setup looking like today?
Well, first up, Sonal, wishing you a very happy birthday, and then we'll get to the markets. Well, as you pointed out, the GIFT Nifty is suggesting a slightly higher start, close to about 50 to 60 odd points, taking cues from the rally that we had on Wall Street on Friday. Asian markets are mostly holding up in the green. But, the way we left off on Friday was on a weak note. In fact, the Nifty and the sensex extended their losing streak for the 5th consecutive week. Now the support to watch from here on will be the Friday intraday low, 19,229. Immediately on the way up, it's going to be the 50-day moving average and the 100-day moving average, roughly positioned at 19,400. Global markets are holding up. As we pointed out, U.S. markets, the Dow was up 250 points. The dollar index is still firm above 104 levels. Brent crude prices hovering around $84.50 per barrel. In terms of flows, we had the FI selling 4,600 crore in the cash market. The DII's net bought 1,400 crore in the cash market. But the flows have been skewed on the back of the many block deals that we had on Friday. Remember, Paytm was the big block deal. Today, all eyes are going to be on Reliance's AGM. Last week, Reliance was a bit under pressure ahead of the AGM, the 46th AGM, 2 p.m. onwards. But this week, the two important cues will be the India Q2 GDP print and the monthly expiry for the August series. Back to you.
Okay, all right, Rima, thank you so much for the market setup and your wishes. But, of course, we do have a lot of stocks that will be on our radar as well. Surbhi has that list. Surbhi?
Thanks so much for that. So, happy birthday to you, Sonal. Firstly, on my radar is BEL. The company gets new defense and non-defense orders worth 30 to 90 odd crores during the month of July and August. Linde India, the company receives a letter of acceptance from SAIL for installation of 1,000 tons per day cryogenic oxygen plant. BHEL, the company receives an order from NHPC worth 20 to 42 crores. The execution timeline for this order is close to 75 months. Somani Ceramics, the company will invest 33 crores in its subsidiary, and also it's going to divest its entire 51% stake in Somani Fine Vitrified. L&T, the company has received a shareholder approval for a buyback of up to 10,000 crores. And lastly, Z Entertainment will also be on our radar as Puneet Goenka moves to SAT challenging the SEBI's confirmatory order where they were restricted from taking any KMP positions.
Okay, all right. Thank you so much for all those stocks in focus. Thank you, Surbhi. And finally, let me go across to Manglam, joining in with all the cues from the F&O space. Hey, Manglam.
Good morning, and wish you a happy birthday as well, Sonal. But talk about the markets then. The indices on Friday saw a bit of a decline across all the board. It was the mid-cap index which underperformed, so that's something that we'll have to watch out for, especially given the GIFT Nifty indicating a positive start. However, give or take all the volatility, the market is still in a bit of a range. The range has moved a little lower now. It's around 19,200 to 19,350 itself. Cash market flows, the FI is sold in the cash market close to around 4,600 crores. But remember, there were a large amount of large trades as well. There's the big Paytm block too. So the data points to watch out for will be more from the F&O space, largely because it's also the August series expiry week. We saw the Nifty August futures turn into a discount versus a short premium, and that was confirmed by the fact that the FII sold about 1,264 crores in index futures, added close to around 15,000 short contracts out there itself. So what does that mean? The Nifty, the FII long exposure in index futures is close to around 40%, short exposure 60%, and the net shorts are now at 39,000 contracts itself. There was more call selling than put selling, but there was selling on either side. So that's telling you that while the market is likely to be in a range, a bit of an upside will see some sort of resistance. So if you take a look at the 19,300 call and the 19,350 call, both of them were active in trade. And for a premium of 50 to 72 rupees, telling you levels upwards of 19,300 to 19,400 would see some resistance. On the way down, 19,200 would be an important support. What are the option writers looking at? Support between 19,150 to 19,200, and let's simplify it, resistance between 19,350 to 19,400, where there is the Nifty 50-day moving average as well. So the GIFT Nifty indicates a positive start. Not sure if that rally will sustain or not, at least the congestion that we're seeing on the way up. There are a bunch of stocks in F&O band, so just keep an eye out on the ones that got in and got out. New in F&O band are Escorts and Sun TV. Out of band, we have Delta Corp, India Bulls Housing Finance, GNFC, Metropolis and PNB.
Okay, guys, thank you for your wishes and, of course, for prepping us up for this crucial trading day ahead. So with that, we'll take a short break. When we return, Reliance Industries will host its keenly awaited annual general meeting this afternoon. We'll get you all the details and expectations on the other side. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Well, the market will be tracking index heavyweight Reliance Industries annual general meeting later today. Sonia is joining us with the key expectations. Sonia?
Now, here are a couple of things that you can watch out for from the AGM. Some updates on the business, of course, and the partnership announcements that the company has made. But the IPO timelines will be keenly awaited. Now, remember, Reliance in the 2019 AGM said that they will list the telco and the retail business within 5 years. Now, with 4 years already behind us, the investors, stakeholders, and the industry is keenly awaiting whether any kind of timelines will be announced in this AGM. Now, BofA Securities released a note where they said that the AGM is generally not a forum for the company to announce timelines, but given that they just did that deal with QIA, perhaps for Reliance Retail as well as for the Jio business, some indications could come through. Any potential value unlocking announcement may help deleveraging. So that's the big thing to watch out for. Apart from that, on the telecom business, a couple of things that we're looking out for. One is any updates on the 5G rollout and the Jio Air Fiber. Any updates around the recently launched Jio Bharat phone, as well as they may focus on some partnerships with Netflix on prepaid bundle packs, etc. So that's for the telecom business. For the retail business, of course, we are awaiting more details on QIA, the investments that QIA has made in Reliance Retail, and any indication of the IPO as well. On the energy business, any update on the investment in clean energy? The company is also looking to set up gigafactories in both solar and the battery business, so that will be keenly awaited.
Okay, Sonia, thank you so much for all those details. And of course, the standard disclaimer, Network 18 and TV18, the companies that operate CNBC TV18, are controlled by Independent Media Trust, of which Reliance Industries is the sole beneficiary. And of course, you can catch all the action only on CNBC TV18. It starts at 2 p.m. So stay tuned for more updates on this one. Okay, let's move on to some interesting conversations and remarks from the B20 Summit in New Delhi. Speaking at the closing event of the summit, Prime Minister Narendra Modi emphasized the importance of India in tackling global supply chain challenges. Listen in to what he had to say.
The future of global growth is dependent on the future of business. और ऐसी सप्लाई चेन एफिशिएंट कही जा सकती है जो तब टूट जाए, और वो भी तब जब उसकी दुनिया को सबसे ज्यादा जरूरत थी। इसलिए आज जब दुनिया इस सवाल से जूझ रही है, तो साथियों मैं आपको विश्वास देता हूं, इस समस्या का समाधान भारत है। एक एफिशिएंट और ट्रस्टेड ग्लोबल सप्लाई चेन के निर्माण में भारत का अहम स्थान है, और इसके लिए ग्लोबल बिजनेस को अपनी रिस्पांसिबिलिटी आगे बढ़ाकर और आगे बढ़कर के हम सबको मिलकर के उठानी होगी। हम सबको ये ध्यान रखना होगा कि सस्टेनेबिलिटी की बातें सिर्फ नियमों कानूनों तक सीमित न रहे, बल्कि ये रोजमर्रा की जिंदगी का हिस्सा बने, जीवन का हिस्सा बने।
Okay, all right. Those are some of the words coming in from Prime Minister Modi. Finance Minister Nirmala Sitharaman also addressed the B20 Summit on Friday. She urged central bankers not to see interest rate hikes as the only tool to rein in inflation. Listen in.
Key priority for economic growth is stemming inflation, because persistently high inflation will weaken demand. Obsession with using interest rate as the only tool to deal with inflation and not manage the supply side factors will not give a complete solution. Task for central bank, therefore, will have to keep, particularly in today's context, is to keep in mind growth and growth-related priorities, even as equally looking at controlling inflation.
Okay, all right. That's not it, actually. We have some more commentary coming in on the sidelines of the B20 Summit. My colleague Shireen Bhan also spoke to Mark Carney, who's UN Special Envoy on Climate Action and Chair of Brookfield Asset Management, about the transition to clean energy, the state of global economy, and a lot more. Listen in.
As high as $7 trillion of additional investment every year for the next 25 years. That's a global number. So these are enormous amounts. But if I can put it into another number, it's roughly an extra 2 percentage points of GDP globally. And that would just bring the level of investment in the global economy back to where it was at the turn of the millennium. So it's something we have collectively done in the past. We can do it again. Obviously, we have to not just go to where the emissions are, but actually do something about it. The export engines and the comparative advantage that India has in data processing, data management, and software. So that's a fundamental growth that's attractive. Secondly, what we're seeing in the global economy is two rewirings. One in the energy sector, what we're talking about transition, and the other is the rewiring of trade routes, the rewiring of value chains. And this is an economy that has lots of labor. It has real manufacturing expertise. It's very good at improving manufacturing processes, modular manufacturing. If I'm looking where to site a value chain, this is an incredibly attractive market, and I just listed a bunch of things that play into the types of areas that Brookfield likes to invest. I've got to acknowledge what's going on in China and the slowdown there, which is not a cyclical slowdown. They're dealing with real structural issues in the property sector, for example. They'll work their way through, but we're going to see probably slower growth for a period of time. What's going to drive things is an investment boom. We're at the start of an investment boom. It's the flip side of us collectively underinvesting over time, underinvesting in resilience of our economies, underinvesting obviously in the net zero transition, and it's also the consequence of a very positive transformation on the information side, on the AI side.
Okay, all right. Of course, we'll keep getting you more commentary from the B20 Summit through the course of the day. But for now, we'll slip into a break. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. Still tuned into Power Breakfast. It's time to talk about commodities now. Manisha Gupta is joining us as always with all the updates. Hey, Manisha.
Morning, Sonal. Thank you for that. Well, I'm looking at the crude oil prices, which have regained above $80 a barrel. Yet again, we did see Friday see a gain of 1%, and Asia has started on a better note as well. To begin with, the diesel prices also surged 5% in U.S. That's a 7-month highs. Markets also are looking at the developments on a fire breakout in a refinery in Louisiana. And then you're also looking at a report from Morgan Stanley suggesting that the Brent will see support at $80 a barrel going forward on a likely deficit for the rest of 2023. And there's a lot of data coming in this week as well, which the markets will keep an eye on. But China halving the stamp duty on stock trading effective today also seems to be doing a positive sentiment. So many of the commodities have started the day on a positive note.
Okay, positive cues from the commodity markets and the equity markets. So let's carry that forward and get you some action from the world of sports. And there's some good news as well. Olympic champion Neeraj Chopra makes history yet again, becoming the first Indian to bag a gold at the World Athletics Championship. India's javelin king emerged triumphant in the final held in Hungary with a winning throw of 88.17 meters. Pakistan's Arshad Nadeem, meanwhile, finished a close second, qualifying for the Paris Olympics with the second best throw of 86.79 meters. Meanwhile, the men's relay team finished 5th in the championships, having qualified for the final for the first time. Okay, all right. On that positive note, let's quickly take a look at what the GIFT Nifty is indicating. It's indicating an implied open in the green around 60 points higher for our own markets. So it looks like we could see some gap up opening in our own markets after that fall that we saw on Friday. With that, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.